It's a red day recap, and let's spend a moment of silence to remember the PA accounts that have come before us. As you can see here, not a beautiful green day, not good at all, actually. Pulling up the 5-minute chart here on the NASDAQ, the NQ this morning. A couple things we had going on. We had the gap fill potential. We talked about this before the market opened. We had this big gap fill potential, and to be honest, I definitely did not capitalize off of this move. So I think what really led me to down this road today, or what really led me down the road today to the road that I went down, is the fact that I kind of missed out on this first move. I got greedy trying to short down here at the bottom. And then, we had some long opportunities and it just kind of got chopped up in this area here, just chopped up, and it just kept getting worse, right? Because look, the market just kept going sideways and it was just chop. And we look at the NASDAQ, well, that chop was killer. And the final straw, the final blow was this move right here. I was like, all right, we're going to bounce 290. We're going to push back up. We're going to, find this bottom of the range. Started getting long, and look at this thing just dumped. And when you're trading with large size, you cannot basically weather any type of large drawdown, even when you have padding in your account. You cannot do it. So the big problem is when you're trading with large size, you really got to be you got to be on the right side of the market. You really do. You just got to be on the right side of the market. And if you're not on the right side of the market, things can get nasty very, very quickly, right? Because when you're trading with large size, the losses can get very large very quickly. And then you hit that kind of emotional, like deer in the headlight moment where you're like, well, it's going to bounce. And before you know it, it's down, and you're stopped out and you've blown up 12 PA accounts. So the road to heaven, so the road to success is never a simple, easy, straight road. I won't deny that. I will not sit here and tell you that it's all rainbows and butterflies and sunshine and beautiful money. The biggest issue for me that leads to blowing up, and I think a lot of people experience this, is, you miss out on the first trade. You might be like kind of looking for a trade. You see the trade, maybe you FOMO, you get that emotion. Before you know it, you're entering a trade, it goes against you, and you try to kind of just like instantly try to swap back, and before you know it, now you're like getting chopped up in an area. And it's very simple, very easy, very quickly can you go from being green on the day to being red very quickly when you're trading large size. So sizing is obviously a big issue for me sometimes. I think just the FOMO sometimes of just like missing out on a trade and then wanting to get in on the trade when I should have been in on the trade earlier. It's funny because we think about the risk, right? We look at a trade, we're like, okay, I don't want to get in now, right? Like I don't want to short now. Like for example, let's say this morning, I'm not going to short here. Okay. Oh, it goes down here. Like, I'm going to wait, and then it goes lower, and you're like, oh, and then you finally short here, and then it stops you out there, and then it goes down lower. And it's funny because when the market is actually like at a point where you think it's a good short and you should short, that's when you're like waiting because I'm not going to short because maybe it's going to rip back up here, and you end up like watching this move lower, and the FOMO becomes very real. So I don't have a perfect answer on how to stop yourself from foaming into the trade, but I do know that if the first trade that you see works out and you don't take that trade, it is a slippery slope because now you're FOMOing into more. But it's like if you don't take that first trade, that first opportunity to get in on that move, if you see a setup, you don't take that first trade, then you really got to force yourself to like not just jump in on the next leg down or whatever it is. You got to be really patient after that point, because if you just jump in because of emotions or just whatever feeling you have, well, you're probably going to get stopped out. It's probably going to reverse up and then end up making that big move, So like shorting here at the 300s, you're like, oh, it's for sure. It's going to roll over, and then it pops up here to the 315s, and then it ends up rolling over all the way. And then that's the short. So, you shorted here, you get stopped out. Lessons of the day here is number one, leverage. Number two, if you're going to have a strategy, you're going to have a setup that you want to trade. If you're going to trade the 15-minute opening range setup, like you got to trade the 15-minute opening range setup. You can't trade the 15-minute opening range setup, make money, and then try to trade like another random setup. If you find something that works for you, you got to like stick to that. And when it's not that time any longer, when it's no longer the 15-minute setup, when it's no longer the gap fill, when the market opens up and you're sitting there and it's like, okay, I'm looking for this gap fill. Let's say, I look at the NASDAQ the morning before the market opens and I'm looking and I'm like, okay, if we get this gap, like look at this gap fill, right? If I see this gap fill, like this is the obvious move, right? Like this is the move that I should be taking, the short to the downside to fill that gap. That's a strategy. That's an overall setup that I know, in general, it's a really go-to strategy for me because look at how easily that played out. And then look what happened the rest of the day. So the first move of the day paid out beautifully. And then the rest of the day, look at that, sideways, 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 and just crap, like just total absolute crap there the rest of the day. So, the big move at open, very easy. Now, obviously in hindsight to see, but that gap fill was very much there. We know gaps love to get filled. So why are we not hammering this setup to the downside instead of trying to play around here in the middle? The middle between two pivot points. You got the pivot point, you got the VWAP, got all this stuff there. And look at that, just absolutely insanely nasty sideways market at that point. So it's really important to identify a setup, have a strategy, and focus on that. If you're going to have a strategy, well, what the fuck is the point in having a strategy if you're not going to trade that strategy, right? You can't just have a strategy and then willy-nilly trade everything else on the inside. So I'm kind of looking forward to getting away here the next few days or weeks or whatever it is, going to Paris and France. The nice thing right now is luckily Apex is 1 day pass, so it'll take me a day basically to get back into those funded accounts, to get those funded accounts again with Apex. But the moral of the story here is if your setup is not there, it's not your setup. Number one, like, why are you taking it? Number two, why are you sizing into it? That's one thing I really got to focus on. Take the good setups, size into the good setups. Take the good trades, size into them. Take your normal size on only good setups. If that good setup isn't there, don't take it. Don't go sizing up into a choppy sideways market. Like, what are you doing, Patrick? Come on, this. This is not, this is not a secret at this point. We know what happens when we do that. So, it's just, it's the ups, it's the downs of being a trader, baby. You're going to have to go up, you're going to have to go down. And sometimes you give back. Sometimes you got to give back. Sometimes you got to pay your tuition. And the road is, I think, for everybody, no matter how long you do this, for 10 years, 5 years, 1 year, you're going to go through the ups. You're going to have these days where it just not going to work out in your favor and you're going to walk away in the red. Today, obviously, I let my red get way too big, and that's obviously another big issue. You can't let a red day turn into a blow-up day, and today was a great example of that. So I'm kind of looking forward to taking a little break from it, coming back after France, after Paris, and kind of just focusing, 15 minutes setup. We know it works. Like, let it happen. Let it do its thing. If it ain't working, it ain't there, then don't take the trade, okay? If it's a sideways market, if we have an opening opportunity with the gap fill, like that's one thing I think I really just need to focus on here the rest of the year. Number one, looking for gaps to get filled, or just number two, the 15-minute opening range strategy. So, honestly, the 15-minute opening range strategy might just be the go-to savior in terms of trying to enforce consistency and discipline. So I really do want to put this out here so people see that it's not always just green, green, green. I do have red days, and today obviously is a big red day here. So we're walking away in the red, and we'll live to fight another day, and we can just chalk it up, hopefully, as another great learning experience in the market that is always teaching us new lessons and lessons that we need to hopefully learn in time. Learn lessons. Let's learn some lessons, people.